earnings are a critical component of the Indian stock market and play a significant role in determining the direction of the market. On the back of this, let's discuss how the Nifty 50 companies have performed in Q3 amidst various headwinds that we've been witnessing recently. In Q3, Nifty 50 companies' sales growth was up 18%, while the earnings growth was up 11%. The strong recovery in the auto and banking industries contributed to the overall performance, but the results were negatively affected by a significant decline in global commodity prices, which impaired the earnings of metals and oil and gas. Now, when we remove the financial sector, Nifty earnings growth was actually flat. When we remove the metals and oil and gas sectors, Nifty posted a 31% earnings growth year over year. The positive impact of the financial sector on overall performance is something that is noteworthy. The financial services, especially the banking sector, has seen a boom in earnings. Now, due to healthy credit growth, margin expansion, and ongoing asset quality improvements, growth momentum for the banking sector has remained strong. Now, improving demand condition and a decline in commodity prices have also favored the auto sector. However, we saw muted profitability in the commodity space, that is the metals and oil and gas domain. But because the financial and auto sector is doing so well, it's balancing out the negative effects of higher cost on the overall earnings of the Nifty 50 companies. FDI stands for Foreign Direct Investment. It refers to an investment made by a company or individual from one country into business in another country. Now, the investment can take many forms, including buying shares in a foreign company, establishing a new business, or acquiring an existing business. Now, India's FDI inflows is having a bit of a roller coaster ride. Last year, India broke its own record with a whopping $84.8 billion in FDI inflows. However, this year, total FDI inflows dipped to $55.27 billion during the 9-month period. Now, this compares to a $60.4 billion of FDI in the year-ago period. Now, India, a developing economy, requires FDI because it is a crucial catalyst for economic progress. The FDI has seen a dip. Now, this can be attributed to the uncertainty created by macro headwinds. But we do expect that India will continue to see a rise in foreign investments once these headwinds stabilize. Now, steps taken by the government towards lowering of corporate tax rates, streamlining labor codes, and introducing reforms for ease of doing business, the massive capex spending initiatives such as Make in India have been very important for India to attract foreign investments into the country. Now, with the exception of a few strategically important sectors, most of the industries are also now accessible to 100% FDI via the automatic route. So, on the back of all of these core initiatives and policy, even though we've seen a temporary blip, we do see FDI flowing into India strongly. So, what does these news mean for you? Despite several headwinds, corporate earnings for Q3 remain healthy, with financial services and auto sector driving the quarter. This will have an indirect positive impact on you. Even if the FDI has dipped, we anticipate that over the next few years, foreign investment will increase in India, driven by policies and initiatives, which has driven optimism about India's growth story. This will have an indirect positive impact on you. While I say this, is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.